Hello and welcome to Dinar Shift. Have you ever stopped to genuinely consider the intricate, often unseen process that unfolds every time a major financial institution updates its foreign exchange systems? It's far more complex than a simple input of a new number. Every single day, countless individuals check their mobile banking applications or log into their online accounts, observing minor fluctuations, tiny shifts, often just fractional in the currency exchange rates displayed. However, recent, subtle anomalies in these digital systems have caught the attention of financially astute observers and everyday customers alike. These aren't the typical minuscule movements. Rather, reports have surfaced about momentary maintenance alerts, certain currency codes temporarily disappearing from lists, and quiet under-the-hood software updates. This collective activity has prompted a significant question. Are major United States banks currently undertaking preparations for a fundamental shift within the complex landscape of global currency valuation, specifically involving currencies like the Vietnamese Dong? We are going to peel back the layers and take an in-depth look at the inner workings of bank exchange systems, investigate the distinct reasons why the Vietnamese Dong has become a focal point of widespread discussion, and calmly analyze what these ongoing digital system updates genuinely signify for the average individual interested in international finance. The financial rumor mill is notoriously active, and it is a common occurrence for exaggerated claims and speculative videos to circulate widely across various social media platforms, often asserting that specific global currencies are on the precipice of an immediate, explosive revaluation, or that they are set to experience an unprecedented rapid increase in value overnight. For anyone seeking to navigate the often choppy waters of international economics, the challenge is clear. How does one accurately distinguish between substantiated financial facts and pure, unverified hype? To arrive at a truly grounded and reliable answer, the necessary starting point is a detailed examination of the core mechanics. We must first understand precisely how official exchange rates are calculated and established, and what specific, regulated role major commercial banks truly play within this vast and interconnected global process. Developing a clear foundational understanding of this mechanism is the single most effective way for any individual to gain the necessary discernment, enabling them to confidently separate financial reality from circulating market rumors, especially in the wake of viral claims or highly shared speculative posts. Let us establish a solid foundation by reviewing the absolute essentials of international banking operations. Every commercial banking institution in the United States that actively engages in the management, buying, or selling of any foreign currency is connected to an immensely sophisticated and continuously active global network of exchange rate information feeds. These specialized data feeds are not static. Instead, they are dynamic, updating the posted rates with remarkable frequency, often several times within a single minute. The source of this live data is a diverse and influential collection of global entities, including massive international financial markets, sovereign central banks, and specialized currency trading platforms that operate around the clock. Key global bodies such as the Federal Reserve, the International Monetary Fund, IMF, and major global clearinghouses are responsible for continuously providing a set of definitive reference rates that these commercial banks use as the bedrock for setting their own internal pricing structures. When an individual makes a decision to either purchase or sell foreign cash, perhaps at a local bank branch or through their online portal, the specific rate that they are presented with is a calculated figure. This figure is not arbitrary. It is meticulously derived from a dynamic blend of several crucial factors. These factors include the current wholesale market data, the bank's own necessary internal markup to cover operational costs, and the specific transaction costs associated with executing the foreign exchange trade. However, there is a fundamental and widely misunderstood truth about this process that must be clearly stated. Major commercial banks do not possess the authority or the capability to unilaterally determine or decree the inherent value of any foreign currency. Their role is reactive, not causative. They fundamentally react to the ongoing value established by the wider global marketplace. The true, underlying value of an internationally recognized currency, such as the Vietnamese Dong or the Iraqi Dinar, is established primarily by the vast, interconnected international markets and, crucially, by the specific monetary policies implemented by that country's sovereign central bank. When the government of a foreign nation chooses to make adjustments to its monetary policy, for example, by either raising or lowering interest rates, or by making strategic changes in how it manages its national currency reserves, these actions exert a powerful, natural influence on the currency's prevailing exchange rate. Therefore, when banking customers occasionally encounter messages on bank websites referencing maintenance or temporary updates, it is vital to understand that this action does not automatically, by itself, signal that a dramatic revaluation event is imminent. In the vast majority of cases, these messages are simply an indicator of routine data synchronization, software patching, or other necessary operational cleanup required to maintain the system's integrity. So, the question remains, why is the Vietnamese Dong, in particular, attracting such a concentrated and sustained level of global financial attention at this specific moment in time? The underlying reason is a compelling economic success story. For many years, Vietnam's national economy has been demonstrating a steady, robust pattern of continuous growth and structural development. The nation has successfully transformed itself into a critically important international center for advanced electronics manufacturing, high-volume textile production, and diverse exports across the entirety of the Asian continent and beyond. Major internationally recognized corporations, including technological giants like Apple, Samsung, and Intel, have all made significant strategic decisions to expand their manufacturing and operational footprints within Vietnam. This substantial inflow of global corporate investment and trade volume has undeniably led financial analysts and international investors to engage in a much closer and more serious evaluation of the Dong's long-term financial potential and trajectory. While it is entirely accurate to describe the Vietnamese Dong as a currency that is still subject to the careful, tight management and control of its government's central bank, its current stability, combined with Vietnam's clearly rising global trade influence and undeniable economic strength, firmly establish it as an exceptionally interesting and relevant case study within the complex, ever-shifting landscape of global finance. This is precisely where a widespread common misunderstanding frequently takes root and proliferates online. When major U.S. banks systematically carry out routine internal software updates or essential rate data refreshes that happen to include listings for currencies like the Dong, this entirely normal administrative action can be easily misinterpreted by the public. Screenshots of these internal system activities often begin circulating online rapidly, leading many observers to prematurely jump to unfounded, often highly speculative conclusions about imminent, major financial events. The essential reality of the situation is that these data updates are a regular, completely unremarkable, and fully necessary component of how sophisticated digital banking systems are designed to operate on a daily basis. Banking institutions are under continuous obligation to periodically refresh and meticulously synchronize their core data feeds, update critical compliance tables, and run crucial anti-fraud checks for every single global currency they officially recognize and list in their internal databases. This rigorous process must be completed, even for currencies that the bank may not currently offer for public retail exchange to its everyday customers. To state this critical point in the simplest possible terms, the mere fact that a currency's specific code is listed or indexed within a bank's massive back-end system emphatically does not signify that the currency is actively tradable to the public right now, or that its revaluation is scheduled. Instead, the inclusion of a currency code simply means that the bank's underlying digital database recognizes the currency's existence and has its data structure included. You can conceptualize this operational reality as being similar to a specialized application that has been installed and is residing quietly on your smartphone. It is undeniably present within the system. Its existence is fully recognized by the operating software, but until you physically open and activate it, it remains inactive and is not performing any current function. Modern banks maintain comprehensive listings for many hundreds of global currencies within their systems. The majority of these listings are clearly and intentionally marked as either inactive, restricted for internal use only, or temporarily placed on hold. This structured and layered approach is considered a standard operating procedure in international finance, and absolutely not a clandestine or secret signal indicating an impending or secret currency revaluation. For a major U.S. commercial bank to begin offering public-facing, retail exchange services for a non-widely traded currency, such as the Vietnamese Dong, a number of specific and legally binding preconditions must first be met. Initially, the Sovereign Central Bank of Vietnam, formerly known as the State Bank of Vietnam, would need to officially adjust and liberalize its existing monetary policies to specifically permit a much broader and less restricted level of international trading access for its currency. Following this crucial policy-level change, the new, Official exchange rate would be required to be formally published and disseminated through established global market channels and regulated financial news networks. It is only after this official publication and regulatory approval has occurred that US-based commercial banks are then legally permitted to update their own internal systems and begin offering the new, verified rate to their customer base. Until all of these fundamental regulatory steps have been completed and officially confirmed, no commercial bank operating in the U.S. can legally or practically offer a currency exchange service that exists outside of the existing, fully approved and regulated channels of international finance. It is also of paramount importance for all observers to continuously remember that large, systemically important U.S. financial institutions, including recognizable names such as Chase, Wells Fargo, and Bank of America, are subject to extremely rigorous and uncompromising regulations. These regulations are strictly enforced by influential bodies such as the Federal Reserve and the Office of the Comptroller of the Currency. Crucially, these institutions are explicitly forbidden from engaging in financial speculation regarding foreign currency values, and they are absolutely prohibited from pre-announcing or predicting any future exchange rate changes to the public. Every single foreign exchange rate that a major U.S. bank displays, whether online or in-branch, must be in perfect alignment with officially verified, real-time global market data. This regulatory requirement is non-negotiable. Consequently, when speculative claims are encountered, such as those alleging that a bank teller, an unverified insider, or any other low-level employee has somehow confirmed a pending, secretive rate update, these claims must be approached with the utmost caution and professional skepticism. Banks are strictly governed by federal confidentiality and highly detailed compliance rules, and they are categorically prohibited from sharing any such sensitive financial or operational information with the public or with unauthorized personnel. Any contrary claim is almost certainly the result of pure misinformation or misunderstanding of internal procedures. Shifting our focus to a broader, more macro-level perspective, the fact that global currency management systems have recently been undergoing more frequent updates and infrastructure overhauls is a direct consequence of the widespread and ongoing trend of digital modernization across the financial sector. Since approximately 2023, numerous major U.S. banking institutions have been heavily investing in and actively upgrading their core foreign exchange (FX) infrastructure. The primary goal of this extensive modernization effort is to create systems capable of handling significantly faster, more transparent, and more efficient cross-border financial transactions. This ambitious technological undertaking includes the critical task of aligning legacy systems with new, standardized global platforms such as SWIFT GPI, the ISO 2022 messaging standard, and emerging blockchain-based settlement platforms that offer unprecedented speed and security when banks engage in the necessary work of comprehensively updating their internal technological frameworks and protocols. It is an entirely common and expected occurrence for customers to temporarily see under-maintenance notices or brief system outages within their consumer-facing banking applications. It is crucial to re-emphasize that these notices are appearing not because some secret currency revaluation event is imminent, but rather because the underlying global financial technology is continuously advancing, evolving, and being actively replaced to meet modern demands. For Vietnam, this powerful modernization trend is equally and demonstrably strong across its financial sector. The country has been diligently working to fully integrate advanced digital payment systems, significantly strengthening its anti-money laundering policies, and actively improving the overall transparency and efficiency of its entire financial industry apparatus. These specific actions, the committed implementation of transparent digital systems, robust compliance frameworks, and enhanced financial oversight, are the universally recognized, tangible steps that any nation takes when it has a strategic goal of deepening and expanding its economic ties with the global community. This measured, systematic approach to reform is a major reason why many well-informed financial observers maintain an optimistic view regarding Vietnam's long-term economic trajectory. This optimism is not based on wishful thinking or the promise of sudden, speculative currency jumps, but is instead grounded in the observable reality of solid, measurable, and highly effective financial reforms that demonstrate a commitment to global standards and stability. This leads us directly to the practical implications for those individuals who currently possess or are considering holding foreign currency. If you have made the decision to acquire the Vietnamese Dong or any other less common or exotic currency primarily as a form of financial speculation, It is absolutely essential to internalize a foundational truth. Currency trading, by its very nature, is a highly complex, inherently risky, and notoriously unpredictable endeavor. Exchange rates are never determined by a single factor. They are instead constantly influenced by a vast matrix of complex global macroeconomic factors. This matrix includes prevailing international interest rates, domestic and global inflation levels, the national balance of trade, and the ever-shifting psychological sentiment of major global investors. The most prudent and responsible approach for any individual is to treat foreign currency holding exactly as they would any other complex investment, with meticulous, detailed research, a clear and honest understanding of all associated risks, and an ironclad commitment to never relying solely upon unverified internet claims or unsourced predictions of massive, imminent gains. A logical and frequently posed question is, if U.S. banks are ethically and legally unable to discuss or preempt upcoming rate changes, how can the public be certain when an official, verified financial event actually occurs? The straightforward and definitive answer is through verified, unimpeachable public sources of information. When a nation's central bank makes a major official change to its exchange rate policy or other critical monetary parameters, that information is not kept a secret. It is instead immediately and formally published on the official government websites, simultaneously reported by leading regulated financial news outlets such as Bloomberg or Reuters, and instantaneously reflected in all live, professional market data feeds across the globe. If this specific information is not visible on these verified, official platforms, then it is simply not official, regardless of what unverified screenshots, speculative rumors, or anonymous claims may be rapidly circulating across the online ecosystem. Another key financial principle that warrants consistent repetition is that large, regulated commercial banks do not operate on a business model based on passively holding exotic currencies, such as the Dong or the Dinar, in the hope of making a massive profit from a sudden, speculative revaluation. Their established and continuous core business model is built on the secure, transparent, and profitable facilitation of financial transactions and cross-border payments. It is not built on high-risk speculation on potential exchange rate spikes. This fundamental distinction is crucial for the public to grasp, enabling them to clearly differentiate between the regulated, professional operations of financial institutions and the often unregulated, high-stakes world of online currency speculation. Regulated financial institutions are bound by strict protocols governing data compliance and systematic risk management. They are simply not in the business of gambling based on market rumors. The discussion should now move to a detailed look at the fundamental real-world factors that genuinely drive a national currency to systematically strengthen and increase in value. The mechanism is not driven by secret, behind-the-scenes decisions or the flipping of a hidden switch. The driving force is clear, measurable economic performance. A country's currency experiences a sustained increase in value when the nation's gross domestic product, GDP, demonstrates consistent growth, when its exports significantly outpace its imports, when domestic inflation is successfully kept at low and manageable levels, and when the global community of investors expresses a high and sustained level of confidence in the country's long-term future prospects. Vietnam, as a salient example, has been diligently concentrating its policy efforts on improving all of these critical economic fronts simultaneously and consistently. The cautious, steady, and measured approach adopted by the State Bank of Vietnam has been instrumental in maintaining crucial currency stability, which is exactly the foundational element that serious international partners require and look for before they consider increasing their exposure to the nation's currency. Furthermore, a specific examination of the deepening financial and economic connection between the United States and Vietnam reveals a powerful trend. Over the span of the last decade, the commercial and investment ties between these two nations have intensified significantly and strategically. The United States has solidified its position as one of Vietnam's largest and most important trading partners, and a stable, predictable currency relationship is a mutually beneficial foundation for both economies. This strong underlying trade relationship is yet another substantial reason why major U.S. banking institutions continue to maintain the Vietnamese Dong in an active, listed status within their comprehensive databases. Its inclusion is a reflection of its status as a recognized and relevant international currency, even if the retail exchange access available to the public remains limited or highly controlled compared to major currencies like the euro or the pound. Some astute viewers will inevitably inquire, If all financial systems are subject to regulation and the key data is ultimately transparent, why is it that persistent, often sensational, financial rumors continue to spread with such ease and velocity? The root cause of this phenomenon is deeply psychological. There is a compelling, innate human attraction to the concept of hidden, exclusive opportunities, the intoxicating thought that an individual might be privy to non-public information and be early to a massive, life-changing financial event. Unfortunately, this very psychological susceptibility is what causes countless individuals to fall victim to financial misinformation, often packaged as insider tips online. Rumors concerning the sudden revaluation of various currencies have been circulating continuously for decades, and they often persist with absolutely no verifiable, factual evidence to support them. In this highly connected digital age, it is more critical than it has ever been to rely exclusively on verified, professionally sourced, and publicly available data, rather than accepting the highly dubious claims made by anonymous accounts or in private insider chat groups. The most intelligent and strategically sound action that any individual can take to remain genuinely informed is to diligently monitor and follow credible, established financial sources. This means actively tracking the official statements released by the State Bank of Vietnam, paying close attention to the economic reports issued by the International Monetary Fund, and routinely checking the official communications from your own local, regulated financial institution. Utilizing legitimate, real-time exchange rate trackers that pull data from regulated financial markets will ensure you always have access to the actual, current market value of any currency, effectively shielding you from speculative noise and unfounded hype. Let us now return to the core question that began this entire analysis. Are major U.S. banks actively preparing a specific, secret infrastructure for a sudden, dramatic Vietnamese Dong exchange? The consistently truthful answer is that U.S. banks are already and routinely engaged in handling every kind of foreign currency exchange imaginable every single day. But they do so strictly within the legal and regulatory parameters established by international markets and sovereign central banks. Should the Dong status ever officially shift to become a more widely and freely traded currency on the global stage, those same existing, highly capable banking systems will simply update their data feeds and compliance tables to reflect the new, verifiable reality. There is absolutely no need for any kind of secret, clandestine preparation or a hidden system switch. This systematic process is simply the established, transparent, and regulated way that global banking operations function. Every single system update, every routine software patch, and every required maintenance notice is simply a routine part of maintaining this vast, interconnected, and secure global financial machine. If you are a member of our viewing community who maintains a keen curiosity about the complexities of investing in any foreign currency, please internalize this truth. Knowledge and factual information are your single most important and effective defenses against financial misinformation. Take the time to genuinely understand the specific, transparent mechanisms by which central banks manage and influence their respective exchange rates. Educate yourself on the multifaceted factors that drive genuine currency movement, and always commit to using only fully licensed and regulated dealers should you choose to engage in buying or selling. It is crucial to immediately dismiss any individual or entity that promises guaranteed, massive profits or attempts to cite specific, highly speculative upcoming revaluation dates. Legitimate, professionally vetted opportunities are always based on verifiable facts and transparent economic data. They never require sensationalism, hype, or the propagation of unfounded rumors to convince interested parties. We are all currently living in a period of unprecedentedly rapid change within global finance. Nation-states are aggressively modernizing their entire monetary and banking systems. New forms of digital currencies and assets are emerging and gaining traction, and the foundational banking networks are being strategically restructured to prioritize high speed, maximum efficiency, and total transparency in cross-border trade. This era of transformation is undeniably exciting and filled with new potential, but this rapid change also means that financial misinformation can unfortunately spread faster and further than ever before. Consequently, the most reliable and effective strategy for staying ahead of the curve is to maintain a relentless commitment to learning, to cultivate a healthy professional skepticism, and to consistently insist on relying solely on information that is credible, verifiable, and publicly accessible through established financial channels. As we bring this detailed discussion to a close, let us make one final point unequivocally clear. There is no evidence of anything secretive, magical, or inherently conspiratorial unfolding behind the digital screens at your local commercial bank branch. The activity that has been observed and reported, the system updates, the compliance checks, the routine maintenance, is not a signal of a hidden revaluation. Instead, what you are actually witnessing are the natural, professional, and entirely expected signs of technological progress, systemic modernization, continuous regulatory compliance, and the development of demonstrably improved financial systems designed to efficiently support the next generation of interconnected global trade. And yes, this professional, systematic activity absolutely includes the routine handling and listing of relevant international currencies, like the Vietnamese Dong, which simply reflects the verifiable, growing economic strength of Vietnam within a rapidly connecting and evolving world economy. Therefore, the next time you encounter a sensational claim or a highly shared post that asserts a hidden, massive currency revaluation is scheduled for the immediate future, take a moment to pause, deliberately seek out and analyze the real verifiable data, and reflect on the facts we have explored in detail today. The factual underlying truth of global finance is significantly simpler, yet far more grounded and intrinsically interesting than any rumor could ever hope to be. The world's currencies are continuously and dynamically moving, evolving, and adapting to new economic realities. However, it is not sheer luck or secretive conspiracy that serves as the engine for these fundamental changes. The ultimate verifiable drivers are always sound economics, transparent national policy, and sustained, measurable progress toward global financial integration. For more informational videos, like and subscribe my YouTube channel.